All right, so today we're diving into the world of Celsius Holdings. Their stock CELH has been getting a lot of attention lately, and for good reason, too. It's down 70% from its peak. But here's the interesting thing. Even with this pretty dramatic dip, a lot of analysts are still calling it a strong buy.
Yeah,
So
well,
that,
definitely a head scratcher, right?
totally. So we wanted to take a closer look at this and figure out what's going on. Why are some people so optimistic about Celsius?
Well, the first thing to understand is that even though Celsius' stock has taken a hit, analysts are actually expecting a rebound. They're projecting a return to double-digit revenue growth after a bit of a slowdown in 2024.
Okay, so a slowdown, but then a pretty strong comeback. What's causing this slowdown? Did something happen?
Well, part of it is due to a temporary inventory issue with PepsiCo.
Ah, PepsiCo. It
Yeah.
seems like you can't talk about Celsius without mentioning that partnership. So what happened? Did PepsiCo suddenly decide they weren't thirsty for Celsius anymore?
Not at all. Actually, it's kind of the opposite. They actually overestimated their needs last year and ordered way too much Celsius.
Oh, so they overstocked.
Exactly. And now they're working through that excess inventory, which is temporarily impacting Celsius's growth numbers. Think of it like when you stock up on your favorite snacks during a sale, you're set for a while, but then you eventually need to go back to the store.
Makes sense. So this is just a temporary blip then.
That's the general consensus. Even with this PepsiCo situation, Celsius is still expected to see 7% revenue growth in 2024, which, might not sound as impressive as double-digit growth, but it's still pretty good, especially in this market.
Yeah, not too shabby at all. But what makes analysts think Celsius can bounce back so strongly after this PepsiCo thing blows over?
It's all about the bigger picture. The global energy drink market is projected to grow by 8.5% annually through 2032, and Celsius, with its recent expansion into Europe, is really well positioned to capitalize on that growth.
That global expansion is huge, but let's not forget about what Celsius has accomplished here in North America. They've managed to grab an 11% share of the energy drink market. And they've done it going up against some major players, like we're talking Red Bull Monster, the heavy hitter.
And they did it in a relatively short amount of time, too, which is even more impressive. To put that into perspective, you've got these established brands that have been around for decades, and then Celsius comes along and in a few short years captures a significant chunk of the market. That's what's really turning heads.
Yeah, it's like they came out of nowhere and disrupted the entire game. So how did they do it? What's their secret sauce?
Well, a lot of it comes down to their strategic targeting. They've really zeroed in on the health-conscious consumer. Unlike those classic energy drink brands that often focus on a more, let's say, intense image, Celsius positions itself as a better-for-you option.
And that whole better for you trend is exploding right now. People are way more aware of what they're putting into their bodies. They want that energy boost without all the sugar and artificial ingredients.
Exactly, and that's where Celsius really shines. They've tapped into that desire perfectly with their sugar-free, no artificial ingredients approach. They're not just selling energy, they're selling a healthier way to get it.
It's smart marketing for sure. They identified a shift in consumer preference, and they positioned themselves right in that sweet spot. But it's not all just marketing hype, right? Do the numbers back it up?
The numbers tell an interesting story. Just look at what's happened since CEO John Fieldly took over in 2018. They've experienced this incredible growth spurt under his leadership.
So we've got a company that's aligned with a growing market, they're experiencing impressive growth, and they've got a CEO who seems to know what he's doing. But their stock is down 70% from its peak. It's kind of hard to wrap your head around.
And that's exactly why we're doing this deep dive, right? It's about looking beyond just the surface level, dissecting those seemingly contradictory pieces of information, and trying to paint a more complete picture.
Because let's be real, this whole thing is a bit of a head scratcher. You've got the stock dip on one side and then all this positive news on the other. So how do we make sense of it all?
Well, a good place to start is by delving into what the analysts are saying about Celsius's valuation. That'll give us some insights into what they think about the company's potential.
Okay, because right now I'm feeling a mix of intrigued and totally lost. And I'm sure anyone listening is right there with me. So let's talk about these analysts. They're throwing out some pretty optimistic price targets for CELH, even with the recent stock roller coaster. Like they're saying, don't worry, this thing's going to take off.
It's true. Even with the recent dip, the consensus analyst target for CELH is $46.87, which is a 63% increase from its current price.
Wow, okay, so that's a serious potential comeback.
Right.
But what's driving all this optimism? What are these analysts seeing that maybe we're missing?
Well, for one thing, they're really digging into Celsius's financials, specifically something called the price-to-earnings ratio, or PE ratio.
Okay, hold on. I got to be honest. Financial jargon isn't really my thing.
Yeah.
Could we maybe break that down a bit?
Of course, the PE ratio is basically a way to see how much you're paying for every dollar of a company's earnings. Think of it like buying a slice of pie. The PE ratio is like comparing the price of that slice to how much pie you're actually getting. A lower PE ratio usually means you're getting a better deal. More pie for your money.
Okay, that makes way more sense. So are they saying Celsius is like that undervalued slice of pie that everyone's overlooking?
That's essentially what they're suggesting. They're looking at Celsius's current PE ratio compared to its potential for future growth, and they're seeing a disconnect. It suggests that the stock might be undervalued, even if it doesn't seem screamingly cheap right now.
So it's not just about where the stock is now, but where they think it's heading. Like betting on a racehorse that stumbled out of the gate but has a really strong track record.
Exactly. They're looking at those long-term growth prospects. Now, with that being said, it's important to remember that not all analysts are quite as bullish. Take Jefferies Financial Group, for instance. They actually recently lowered their price target from $53 to $48.
Oh, wow. So they're a little more cautious. Does that mean they're not sold on Celsius anymore?
Not necessarily. Even with the reduction, their new target still represents a potential 48.15% upside from the current price. They're basically saying, hey, this ride might have a few more bumps than we initially thought, but we still think it's going to reach a good destination.
Okay, that actually makes me feel a little better. So it's more of a reality check than a complete loss of faith.
Right, and it highlights something really important about all of this. There will always be a range of perspectives, even when analyzing a single company. That's why it's so crucial to gather information from different sources, understand why those different viewpoints exist, and then ultimately form your own informed conclusion.
That's such an important point. Don't just blindly follow what one person says, especially when it comes to something as complex as the stock market. Do your research.
Absolutely. And speaking of things that are important to consider when evaluating Celsius, let's talk about volatility.
Right, let's address the elephant in the room.
CELH is known for being a bit of a wild child, capable of swinging up just as high as it can drop low.
Exactly. And that volatility is something that any potential investor needs to be aware of. It's a double-edged sword. While it creates opportunities for those big gains, it also carries the risk of significant losses. It's all about finding that balance between risk and potential reward.
It's like that old saying, no risk, no reward. But you really have to be prepared for the downs as well as the ups.
Precisely. And that's where really understanding your own risk tolerance comes into play.
Mhm.
If you're someone who tends to get spooked by market fluctuations, then CELH might not be the right fit for you, even with all its potential upside. It's about knowing yourself as an investor just as much as you know the company you're investing in, which
Yeah.
actually brings us to a really crucial question for our listeners. With all this in mind, what does this all mean for you? How do you take all this information and actually apply it to your own investment decisions?
That is the million-dollar question, and it's something we'll dig into as we wrap up our deep dive on Celsius Holdings.
So we've covered a lot of ground here today. We've talked about Celsius's market position, their growth potential, those wild stock swings. But now for the big question. What does it all mean for you, the listener? What are you supposed to do with all this information?
Well, that's the million-dollar question, isn't it? The goal of this deep dive wasn't to tell you what to think or how to invest. It's about giving you the tools and the knowledge to make those decisions for yourself.
Exactly. We're not in the business of giving financial advice. We're all about empowering you to become more informed, more confident investors.
Right. Think of this deep dive as a starting point. We've given you a taste of what Celsius Holdings is all about. But now it's up to you to keep exploring. Do your own research, dig into those financial statements, really understand the company's story.
Because at the end of the day, investing is a personal journey. What works for one person might not work for another. And that's okay. The important thing is to be informed, to understand the risks and potential rewards, and to make decisions that align with your own individual goals.
Couldn't have said it better myself. So if you're intrigued by Celsius Holdings, keep digging. Don't be afraid to get your hands dirty look beyond those flashy headlines and really try to understand the nuts and bolts of the company. And hey, even if you decide Celsius isn't the right investment for you, at least you've learned something new.
Exactly. Knowledge is never wasted. So keep asking those questions. Keep that curiosity alive and keep exploring the exciting and sometimes confusing world of investing. That's all we've got for you today on The Deep Dive. Until next time, happy investing.